Interesting times, Krishna, Bluestone, Carrot Lane. We really have to see how this competition shapes up. But moving on to another funding story that materialized this week, and we are talking about Rentomojo, an online platform that really lets you rent everything from your furniture to electric appliances. Now that's raised $5 million in Series A because investors see a potential market in rented furnishings, particularly among young professionals who keep moving multiple cities. We caught up with Rentomojo's founder Geetansh Bamania to really understand how this model works and also its moat versus rivals in similar businesses like Lenco. Let's listen in.
A lot of awareness needs to be created for this kind of a model, and which is where most of the capital will be spent going forward. And again, also on making an infrastructure and the product for it, because since it's a new concept, the whole of the tech and the data infrastructure needs to be built completely, which will be absolutely new. I mean, we're building it from the scratch. So I think building the right team, building the right infrastructure, and creating the awareness is where we'll be spending most of the capital. We're not raising equity capital to actually fund the assets right now. So essentially, since we have taken that bit out, suddenly this model has become very, very capital efficient, and I think this capital that we have raised is going to take us a good longer run. We're definitely looking at 18 to 22 months runway with this kind of a capital, and hopefully we might just become cash flow positive before that. We see that to capture this kind of a market from a scalability perspective, you need to solve the capital intensive nature of the business. I think that's where we have created the moat. Last whole phase was we have been fairly instrumental in making that kind of financial instrument through which we can get the financing for the assets going for making this model work. Just because you need a roof above your head, you don't go ahead and buy it. I mean, you rent it, and the same kind of philosophy can be adopted across the asset class. It can be a furniture appliances right now, it can be something else in the future. There's a general misconception that a marketplace, I mean, we are working like a marketplace where there are a bunch of vendors who are there, and we are taking the stuff from there. These are the second-hand players or something like that, which is not the case. We are buying new manufactured products from the vendors. And just the capital and the financing of it is coming from, let's say the banks and the financial institutions. So essentially the consumer, if you're talking about the customer experience as such, they're getting a fresh product. I mean, most of our consumers today are getting the first products, brand new products, typically, for a fresh deployment. But of course, I mean, the nature of the business and the model is such that these products will actually go back. I mean, we'll come back to our warehouse and we'll have to deploy it again. Largely, how the real estate is divided is 70-75% of the real estate is completely a bare shell. That's where a good market lies for us. Whereas the 30% which is there is furnished, and a consumer when gets into that, he's any which way using a furniture and appliances which will be used by several people over the decades. I mean, you get a second-hand furniture. At least Rentomojo is coming into and hand-holding your customer experience and saying, hey, if you don't like the product, we'll ensure that the quality of the products will be good, and we have some stringent quality checks that a product generally goes through before actually getting deployed. How we make money is just by just because of the leverage of margin and arbitrage that we see in the market. I mean, and the margins and the arbitrage in the real estate between a furnished and unfurnished is quite huge. So we have two metrics. One is the margin elimination that we are doing for an e-commerce company, and work on commissions because let's say we have deployed a certain amount of inventory in the market, we generate a couple of returns over it. Let's say on 100 rupees, we typically make about a 6 rupees to a 10 rupees, and we have to maintain certain amount of cost of acquisition, logistics, and warehouse out of it. So we make, of course, the commission. I mean, there's an asset owner and there's somebody who's using that asset, and the person who's using the asset is actually providing us the revenue.